Alright, we're taking a look at the latest 100K portfolio, the aggressive version. 42 different algorithms. These first 6 are some of our basic algorithms. Big trade on Friday after a big down day on Thursday. Friday we saw mirror E-mini S&P capture 10 points. Saw Gold Flash capture, let's see, 7 points. Nice trade. Problem with getting in at the low is that you get slippage usually on the entry. And so there was some slippage there. But we captured that trade. What else happened? SR counter trend, E-mini S&P, nice trade there. SR counter trend, E-mini Nasdaq, nice trade there. 3 out of 4 last week on that. And so soybeans, there was no other trades on SR counter trend 2. SR counter trend 2 V2. These are the 1 minute, 5 minute, and 15 minute versions of SR counter trend 2 V2. If you take a look at it, the 1 minute is in this first set right here. This first column where you have the green box, that's the 1 minute. The second SR counter trend 2 V2 5 minute is here, and the 15 minute is here. And so the conservative version that I'm going to tell you about removes the 15 minute, which is right here, and the 5 minute, which is this box right here. And so I meant to draw instead of make a box, but this is the 5 minute in this window here. That includes these 9. The 15 minute is here. That includes these 9. And then the 1 minute is here. These 3. It includes those 9. So there's 27. And if you're going to trade the conservative version, you won't trade these 5 minute or 15 minute version. But you can turn those back on and you can go between conservative and aggressive. This is an example of how you set up the conservative version by not turning on the automation. You see the SA is gray. And when the SA is gray, the automation is off. But it's green over here. And it's green in the other workspace. And so I'm going to show you the results of this. Of these 2 different portfolios under the 100K. It's a recent modified updated 100K portfolio that you can trade if you have the 100K subscription. It's an optional upgrade. I'm going to show you the results. So here is a screenshot of the 100K aggressive that we currently recommended, up 5,900 on the month. And we talked about how that was a good place to get in when it was down here, and it had a down day on Thursday. I told some of you about that, and then it bounced back on Friday. So up 5,900 on a month. If you started trading on June the 1st, it's had 2 losing months in a row, and it's never had 3 losing months in a row. So it was a good time to get in based on the stats for this portfolio. Right now the risk is about 13,000. If you start now, the worst case drawdown is about 25K, and it's at about 11.5. And so you're talking about $13,000 risk. Whereas last week we were at the 7 or 8K risk mark, and so it was a good time to get in. But you can still get in, you just have to risk a little bit more on this version. Now the conservative version, I'm going to show you that. Here is the conservative version. Worst case drawdown is about half as much. You need to risk about 6,700, 6,800 right now to worst case drawdown. And you see a bounce back this month as well after 2 losing months, up 5,500. Here is the drawdown curve. The equity curve, worst case drawdown is holding, and so these are the results. You see there's 24 algorithms, and so you could trade this with less capital and less volatility in your account, as the other portfolio can have daily swings of plus or minus 5 to 6K, and so it may be too aggressive for you. This one has a lower risk profile as far as the daily profit and loss, and so that's the update on the 100K portfolio. Aggressive or conservative, you can sign up and let me know if you have any questions.